What's going on, everyone? We're going to talk about the reverse repo. If you followed me before, you've probably heard me talk about it in the past. It is still very relevant. And for those of you that do not understand what this is, I have a brief explanation that should help in this. But let's get into it real quick. Basically, a reverse repurchase agreement, or reverse repo for short, is a financial transaction in which an entity, such as a central bank or a financial institution, or sometimes both, purchases securities from another entity with the agreement to sell them back at a later date. In other words, it is a way for the entity purchasing the securities to temporarily lend money to the entity selling the securities. So, in the case of today's market situation, the Fed is actually acting as the buyer of last resort. They're taking in assets. The financial institutions are parking their cash, but it actually works both ways because every time there's a reverse repo, the other end of that transaction is called a repo. So the Fed's kind of been flip-flopping between roles, but essentially the main functionality of the Fed on RRP is that the biggest money market funds are going there on a daily basis and parking their excess cash, to which point they gain significant interest on it because of the current interest rates levels. Now, reverse repos can have a significant impact on financial markets, particularly in the short-term money markets. While the central bank conducts a reverse repo, it effectively removes money from the banking system, which is exactly what the Fed is doing, which can lead to tightening of liquidity conditions, which is what we've seen happen over the last 2 years. The repo demand started to skyrocket in mid-2021, right after the SLR amendment was expired to provide relief to banks and their lending. But basically, when the central bank conducts a reverse repo, again, it effectively removes money from the banking system, which can lead to tightening of liquidity conditions, which is exactly what we've seen happen. This can push up short-term interest rates, which can have a ripple effect throughout the economy. The impact of reverse repos can be particularly significant in times of market stress, such as during a financial crisis or when there is a sudden surge in demand for cash. In these situations, central banks may use reverse repos as a tool to manage liquidity and stabilize markets, which is exactly what they've done. Overall, reverse repos are an important tool in the arsenal of central banks and the financial institutions to manage liquidity and short-term interest rates, and their use can have significant implications for financial markets. Now, this is released. This information comes out on a daily basis. It's posted to the Fed's reverse repo operations website. I'll link that below for anyone that would like to check this daily. And the release of the numbers come out every day at 12:15. So if I refresh this, it should be posted for today. And it is. So the numbers for today, we have a $2,219,000,000,000 repo that was conducted, and this will be overnight. Participating counterparties were 103. Those are the amount of parties that came and utilized this repo window. And again, 2.2 trillion, still pushing near higher than we've ever been in history. So if you look at the chart overall, this is since 2014 when they did their pilot. And then ever since 2021, when SLR expired, it just took off, and we've seen levels that have never been seen before in history. So if you look at also something to note, the quarter end repo, it's typically something where you see the repo skyrocket on the last day of the quarter and then goes down significantly on the first day of the next quarter, which we can see by looking back just a little bit. So if we go look at March 31st, you can see here that 2271 was submitted on March 31st, up slightly from the 29th. I'm sorry, this was for the 30th. So 2271 on the 30th, and then 2375 on the 31st. So a huge jump for the last day of the repo. And then on the first day of the next quarter, which was yesterday, it went from 2375 back down to 2221. So again, quarter end repo is significant as far as intake and outtake is concerned, and it happens typically every time. So as of today, we are trending down slightly from yesterday at 2,219 million, which is 2.2 trill. So again, the offering amount, this is the Fed funds rate. This is the rates that they keep raising. You see this 4.8 here. If we go back a little bit to a couple of months ago, or actually not even that far, a couple of weeks ago, you can see here that the offering was 4.55 before the last rate hike. And then after the last rate hike, it went up to 4.8. So basically, very important thing to check on a daily basis. Comes out every day at the same time, 12:15 p.m. Central, and I will link this below. And it has a lot to do with LIBOR to SOFR transition, which is a very important factor in all of this. So yeah, I'll link this below, but this is something you definitely want to keep your eyes on if you weren't aware of it to begin with. So hopefully this taught somebody something. But yeah, reverse repo. Numbers out today, 2.219 trillion.